Good evening, everyone. My name is Sriram from the Commodity and Currency Research Desk from Reliance Securities. This is the Commodity and Currency Outlook for 24th August 2022. So, starting with the commodity side of things, starting with energy, international oil prices rebounded this Tuesday afternoon trade after Saudi Arabia warned that OPEC and its allies could reduce output to counter sharp declines in oil prices. The US dollar remained on the upside of things but took a breather in the afternoon session and also lent support to the markets in this afternoon session. Looking ahead in the evening session, markets can continue to remain volatile, and again in the Wednesday morning and afternoon session, markets can continue to remain volatile. Aggressive rate hikes by the US Federal Reserve could slow down growth and could dent demand for the crude oil side of things. Additionally, progress around reviving the 2015 Iranian nuclear deal also loomed large over the markets, and a potential deal could boost Iranian oil exports by about 2.5 million barrels per day, and this too capped the upside in the markets. Trigger can also come in from the inventory side of things. We have the American Petroleum Institute data due after market hours tonight, while the official government data from EIA is expected out tomorrow. So again, till that time, markets can continue to remain extremely range bound over the next 24 hours or so, and the range for the domestic crude oil prices will be anywhere between 6970 on the lower side to 7450 on the upside of things. Moving to bullion side of things, international gold struggled below $1750 per ounce this Tuesday afternoon session amid renewed concerns that the Fed Chair Jerome Powell could continue to reiterate that the Fed's primary focus is to cool inflation when the Jackson Hole Symposium is inaugurated on Friday. Looking ahead, prices can continue to remain range bound and under pressure this Tuesday evening and Wednesday morning session, as the Fed will continue to aggressively hike rates in September, which could weigh on the bullion side of things. However, Powell, like last time, mentioned that further rate hikes can depend on the data. So the importance of data and its impact on future rate hikes will be the key trigger for the markets over the next few days. We have the US GDP number, core durables orders, along with the PC price index, which is the Fed favored inflation gauge, all due over the next 2 to 3 days. So markets will be pretty busy, and markets will be awaiting data from the US, and this will be the main trigger for the markets apart from the Fed speech from Jerome Powell on Friday. So till that time, markets can continue to remain range bound, and the range for the domestic gold prices, gold futures for the next 24 hours or so will be anywhere between 50,900 to 51,500 on the upside of things. Meanwhile, finally on the currency side of things, the Indian rupee ended flat this Tuesday amid speculation of Reserve Bank of India intervention bets. The rupee ended at 79.8625 versus 79.8675 in the previous session. Range for the day was pretty flat in a very narrow 9 to 10 paisa band between 79.80 to 79.8975. Crude oil prices rose again this Tuesday afternoon, while Asian and emerging market currencies were mixed, but the Chinese yuan continued to weaken, and this also kept the appreciation bias limited for our local unit this Tuesday's trade. On the bond side, the new 10-year 7.26 2032 bond yields closed at 7.268, higher compared to 7.258 in the previous session, as concerns over inflation weighed alongside a recovery in the US Treasury yields in the previous session. Looking ahead, the rupee can continue to remain range bound, and possibly will look ahead to that Jackson Hole Symposium event where the Fed Chair Jerome Powell is scheduled to speak. But presence of the Reserve Bank of India to curb excess volatility can cap the depreciation bias of the domestic unit. Markets could also look to cues from the monthly expiry, August contract expiry due on Friday. So we feel the markets can continue to remain range bound in the next few sessions, but the range for the next 24 hours or so, we see that the USD INR spot pair can remain within a broad trading band of 79.75 on the lower side to 80.10 on the upside of things. In the overseas market, briefly, the dollar index recovered from the lows of this Tuesday morning session and is slightly on the higher side this Tuesday afternoon, and could possibly trade with gains in the Tuesday evening session, supported by safe haven flows into the dollar. The euro again struggled below parity this Tuesday afternoon session for a second straight row, as recession fears in Europe re-intensified again due to the energy crisis there. So again, weak euro could also push the dollar index higher, and in turn that can also weigh on our domestic unit. So we feel the main trigger for the markets will be, of course, the data points, but the main trigger will be the Fed chair speech on Friday in the Jackson Hole Symposium event. So till that time, we feel dollar index can remain broadly between 108.40 to 109.50 in the upside of things over the next 24 hours or so. So that's it from our side. Thank you for listening. Have a pleasant day. Thank you.